Good afternoon, everybody. Welcome to Intuitus's webinar, and the focus today is the future of the payment sector. I'd like to thank you all for joining and taking some time out of your diaries, because obviously we will all be busy people. What I'd like to do is introduce you quickly to today's panel. Briefly, myself, Adrian Astley-Jones. I am the Chief Commercial Officer at Intuitus. But the really important key people on the panel today are Sonny Sood, who is one of Intuitus's consultants. Sonny is a career veteran of digital technology across the financial services sector, including investment banking, tech startups, and payments. So Sonny, welcome to you and thank you for joining us. And our second panel member is Petru Metzger, who is Global Head of Payments at Endava PLC. And for those of you on the call who might not be aware, Endava PLC is Intuitus's parent company. Petru is a long-standing technologist. He heads up, as I've said, global payments for Endava and is working with clients such as WorldPay, MasterCard, and Nexi. So has a very good insight into the payment sector, both from a technology point of view and from a geographic global point of view. So thank you, gentlemen, for joining us today. In terms of our agenda, what we are going to cover are three main areas: how COVID-19 has impacted the sector, who are the winners and losers, and where are the opportunities for investment going forward. And we are going to do that in a collaborative, interactive way. So we don't do these webinars in a particularly scripted way with loads of slides. We find it is a better way to do this in terms of getting Sonny and Petru to engage in discussion and conversation. And on that basis, we also have a live questions and chat facility. So any of the attendees, if you have questions at any point through the webinar, then please feel free to use that questions and chats forum, and we will endeavour to do our best to answer your questions. So with all of that in mind, let's move on to our first agenda item. So how has COVID-19 impacted the sector? And I'd like to turn to Sonny, I think, here to start with. And perhaps, Sonny, you could give us your two views. I guess, firstly, sort of the top level view around what are you seeing in the payment sector from a technology point of view and a commercial point of view? And, you know, what are the big things that are happening out there across all of the payments value chain? And then secondly, you know, are there any more specific areas that you would like to bring to the fore and think are relevant for our audience for discussion today? So, Sonny, if you could perhaps start us off.
Sure, thank you, Adrian, and hello to everyone. I mean, it's an enormously fascinating time at the moment. For the payment space, there's two main issues. One clearly is the collapse in consumption and demand from the consumer. That's major impact cross-border payments, e-commerce, travel, physical cards and cash clearly have killed demand. Sectors such as travel is down by 100%. But what's really interesting about the severe impacts on demand, I think, is the opportunity for behavior change. So what I mean by that is that payments is a sector and industry where it's notoriously difficult to create substantial changes in consumer, SME, or corporate behavior. Huge amounts of money, huge amounts of risk, expensive infrastructure, very expensive transformational projects. Most of the innovation has been focused around front-end adoption, challenger banks, different consumer acquisition, and consumer engagement. What we have now really is a huge opportunity to change the way we think about payments, moving it from a service to an embedded experience, such as within a chat facility, within any product or service. When you go to buy a car, payments will will be inextricably and invisibly available to you without engaging with a payments provider. But also what I'm really interested in is moving what it's going to take to move us away from cards and physical payments in the developed markets, such as the UK, Western Europe, US, where we're comfortable with physical plastic and increasingly moving towards contactless, and what we can do now to take us from plastic, contactless to digital payments. So there's been some real adoption, increased adoption in digital wallets, some real movement towards mobile payments. And to answer the second part of your question, I mean, some of the really interesting areas now relate to opportunities within fraud management. Clearly, this market has given opportunity with the rise of digital payments, with the rise of card not present fraud, but increasingly identity fraud. And identity is increasingly an important proxy for verification during payment transactions. There's also some really interesting opportunities around defaults in consumer, in SME, and in corporate. What we're seeing is an environment now where the economic impact is going to be more severe than the financial crisis in 2008. I think recently Bain put out a piece saying in Western markets, you're going to see loan losses of 1 to 3 times of what it was in 2008. In China, up to 20 times. So significant movement towards not just the operations and nuts and bolts of payments, but also predicting loan losses, how to manage loan losses, how to give control to debtors, how to manage debtors will be an interesting space that's evolving too.
Okay.
Petru?
Thanks for that, Sonny.
Hello everyone.
Let me bring in Petru here. So are you seeing this from a similar angle, or you know, working across some of the big global payments companies, are there differences between the big global ones and the smaller ones in different parts of the value chain? You know, the challenger bank environment's an interesting one, and Sonny said cross-border payments. Where do you stand, and what do you see at the moment in the market, and also, I guess secondary to that, the technology challenges around that in terms of being agile enough and nimble enough to respond to any of these current market dynamics?
Yep. So Sonny already covered lots of points, but I have just a few more to add on that. So we have seen in US a huge jump on e-commerce adoption. So we see here on the chart. So very slow increase in e-commerce payments, and in the last or in the 2 months of since the COVID started, it just get forcefully probably very high adoption. So that's really important. The consumer are changing, the behavior is changing. It's a bit so before I think it was just the confidence that e-commerce was not really for some people because of the fraud or other reasons. And now they have seen it working from home. Lots of shops transition to e-commerce, and that's creating new opportunities. More as kind of underlying understanding. So payments is everywhere. It's like air. Yeah, everything that we move, it's a payment somewhere in our life. And the COVID impact slowed down the global commerce and the global economy. And of course, impact in payments, it's quite big. It's quite proportional, I'd say, to the global impact. But there are different type of players. So there are players that are really seeing a huge increase on volumes currently because they are very well positioned and in the right, let's say, serving the right merchants in the acquiring business. And there are other players that were completely or slowing down massively or reducing by half the number of their volumes. So this was immediately was creating opportunities for some players like Adyen, for example. They just doubled in value since the COVID started. PayPal and other big players like Stripe, Square, and so on. So all these new players are getting really good traction based on the COVID impact. We have seen also some companies that are creating new products and services based on the new demand. So creating like your own shop, so copying the Spotify model, or onboarding really fast the merchants, the one that wanted to do more business in e-commerce. So those are the direct winners. In the challenger banks, because now the banks were quite close, so there was limited access to physical offices, they were getting very high adoption, and lots of people wanted a contactless card immediately being delivered by post. So this was growing really fast, and we have seen good evaluations in the market for companies that were raising money recently. So a few more points. And one important aspect that we have seen so growing really fast is buy now, pay later model. Sweden even informed everyone that it's at very high level, and it's increasing that. So this is creating kind of a concern for the population that are using these services. And on the remittances, so people are starting, instead of sending money, let's say unofficially via different routes, they're starting to use digital services, which are more transparent, and we have seen some increases in those areas.
Okay, great. Thank you, Petru. Perhaps then, if we move on to our second agenda point, which we touched on a few areas, so sort of the winners and losers. Sonny, is it what are the sort of obvious areas for winners or losers? And a supplementary question, what needs to be in play within a payments business generically for some of those winners and losers to capitalize on opportunity? And what I mean by that is it they need to have first-class agile development teams in-house, or do they need actually to supplement that access to third-party partners where they can develop new product really quickly and get that to market really quickly? Or is it all comes down to you need a really strong, well-focused professional CTO-driven team? It would be interesting to cover those two areas, and I'd be interested in your views, Sonny, on those.
Thanks, Adrian. I think there's some the winners arise clearly from the enforced changes brought about by lockdown. Retail volumes are down, but the digital processes, Adyen and checkout.com, the infrastructure providers that provide the framework for ubiquitous invisible payments will continue to grow. Infrastructure is key, domestically, cross-border. The cost of developing new rails and launching new rails is extremely high, and it's very difficult to get organizations and consumers to move to new rails, and that's why you've seen limited adoption of decentralized payment systems as of yet. Clearly, buy now, pay later is beginning to eat market share in credit card businesses due to the convenience and the experience generated, and also providing credit to a consumer base that wouldn't necessarily be accepted to credit cards themselves. So a younger demographic that are moving away from credit cards into just-in-time or point-of-sale financing. I think the real big winner for me is the huge growth in online trading, investing through the likes of Robinhood, Free Trade, IG Index, various crypto accounts and wallets. And there's this sector itself has a major challenge, and that is one, fraud and card not present fraud, the movement of illegal funds to fund accounts, and for money laundering. And they have a big requirement for KYC and for authenticated transactions and for binding identity. So what I'm seeing is a real interest by gaming companies, gambling and betting and trading companies for payment solutions that also bind KYC and identity within the process. An example of that would be Citizen that uses open banking and PSD2 rails to authenticate identity and to facilitate the payments through a bank-to-bank transaction, thereby eliminating card rails completely. I think in terms of the second part of your question, in terms of what operational requirements, what leadership requirements is required within payment companies to actually move to these new trends. Clearly, it depends on where they are on the curve. Those organizations that don't have necessarily scale but strong on innovation, I'm seeing strong partnership strategies. There have been a couple of US banks in particular going out and buying well-validated fintech concepts to integrate within their banking, and then rolling out new concepts within UK and European banking solutions. But we're also seeing close collaboration with venture builders, third-party venture builders that are engaged with to build very specific solutions. And I think the third part of that is the speed at which and the ease at which it is that new organizations and new ventures are able to build payments capabilities at speed. There's lower regulations. You build on modules. For instance, with Rails Bank or ClearBank, you can build out a banking proposition, for instance, or a payments proposition without the regulatory umbrella within 12 to 20 weeks. So we are seeing some really interesting strategic partnerships, and clearly with valuations in the payment sector declining through declining revenues, but also repricing in the sector down by 30 to 40%, some really interesting acquisition targets.
Okay, that's really interesting, Sonny. Thank you very much for that. So Petru, just taking Sonny's point a little bit more around the operational aspects in terms of a payment company sees an opportunity to win new customers, and invariably that will be, that will impact on they have to process more volume. This is a world that you operate in on a daily basis, where your clients, I'm sure, make significant requests for upping volumes, changing direction. What's the impact of that, and how do people best go around managing that? Petru, can you hear us?
Yes, can you hear me?
Petru, let me repeat the question. I just was wondering, going on from Sonny's point there around operational delivery, without going into too much detail, when you have customers coming to you, payments firms coming to you, they want to win new customers, they maybe want to pivot the business slightly via a new product or service, and invariably that means upping processing more volumes. What are these? What's the impact of that? How easy or difficult is that to do in terms of meeting that demand and driving new product and service?
Yeah, so that's a very common question that we get in payments industry for the last 3 months. And so for the companies that increase the number of payments that they are processing, they are looking how to optimize their systems to support high scalability and good performance of their systems. And also because in the operations teams now, majority of the people are continuously supporting their business working from home. there is a bit of disruption in that area, and the companies are coming with requests to automate their processes to provide better, let's say, self-service portals or apps that can be offered to the merchants or to users, and enable those services more and more directly to consumers of payments. So that's the second part. And on the more in need areas, I think it's the request that we have seen in the digital onboarding area. And as Sonny mentioned, so KYC, KYB checks, AML checks, and so on for onboarding different types of merchants. And here are different ways how they look to deal with it. So postpone the AML and KYC checks, just create the account first, and later when the merchants will have to be paid, the companies are asked for additional details, and this is much faster, but this requires some changes in the internal policies of the companies. So, yeah.
Okay, thank you, Petru. So let's move on to our third and sort of final agenda point, and that's really around, you know, where are the new opportunities, and you know, we've touched briefly on some of these areas, but let's Sonny, if I could turn to you, could you maybe expand your thinking around these areas, and also, you know, specifically from, you know, our audience today, as everyone will know, Intuitus focuses purely on private equity and the ecosystem around private equity. From a private equity point of view, you know, where are these new opportunities, and what does it mean for our listeners today?
I mean, it's a great question, an enormous question. I mean, opportunity is a relative thing. So maybe I'll talk about the things that really interest me in the conversations that I've been having of late with both Series A, Series B startups and some of the venture community. Firstly, it's about the state of lending and the move away from consumer payments, which is almost becoming a loss leader as revenues from consumer payments tend to zero. Where can payments infrastructure and payment technology be redeployed in less SME and more of the corporate and capital market environment? So I think historically consumer fintech and consumer payments has done a great job of transforming the experience. Now, some of that experience and some of that industrialization is making its way over into corporate treasury, for instance, into capital markets financing, and through other asset financing, such as real estate in particular. It's looking at new ways of how to originate assets for securitization and distribution within capital markets, given the zero rate environment we are currently and will be for a little while to come. So other areas of growth we're seeing is fraud, and historically over the last 3, 4, 5 years, the solutions around fraud have really been about identifying fraud, and then it tended towards, once we've identified it, how do we reduce the number of false positives? So how do we stop using solutions that add friction, and how do we reduce the number of false positives so that we're actually transacting, we're not rejecting legitimate transactions. So there are some very interesting fraud solutions that are closely bound within payments technology now, that are using approaches that haven't been used in the UK or in Western Europe for a while. Some pioneered, for instance, in India with UPI, And those center around using PKI, public key encryption, for using certificate-based transactions. And what's interesting is you're seeing lots of payment rails evolve across Europe, lots of stores of value. So we're seeing a lot of interest in how do you drive interoperability across all of these different wallets and all of these different rails. If one wallet can't talk to another, then it becomes just another silo where you're paying acquisition costs and competing for the same customer to store their value, and it becomes a customer acquisition game, and then it becomes an AUM game. Another area we're seeing an awful lot of interest is in how you give customers more control within the payments process. And we're seeing increasingly SME payments companies look beyond buy now, pay later type transactions, but look at request to pay. 1 in 2 transactions in the UK is paid by bank transfer. B2B is paid by bank transfer. And that involves sending an invoice, logging on, and then pushing that payment by BACS or bank-to-bank transfer. What request to pay does, it enables issuing an e-invoice, sending that, and giving the sender real-time analytics and understanding of what the payer will do with that. What is their intent? Will they pay now? Will they pay later? Have they scheduled it? Do they want to pay in installments? And this becomes increasingly important in an environment that has high number of defaults, and really where organizations are trying to be more sensitive in the way that they conduct collections. So we're seeing a lot more interest in that. In terms of open banking, there's been an awful lot of friction to the adoption. Although usage is tending upwards, the customers I speak with really see the opportunity within open banking more as a B2B or a corporate or an enterprise solution. That is to reduce the amount of friction in processes, to increase reconciliation, to drive down the cost of payments overall.
Okay, Sonny, that's thank you very much for that. Petru, can I just turn to you in terms of these areas of new opportunity? Where do you think the areas of growth are? Are they? Would you echo Sonny's view, or are there other ones or additional ones that we've not talked about today? What's your opinion on what you're seeing?
Yeah, so I'd agree, and Sonny already touched on open banking and request to pay. So it's a huge shift in the market in the way to how the payments are working. So before it was more card payments, which was, I give the right for someone to take money from my account. And now it's request to pay, so or using open banking. So you push a payment in the from me to someone. So open banking is getting quite a lot of traction, and especially with the latest announcements in the market. So we have seen companies in the Nordics that are really well adopting open banking. Even if there is a little bit of friction in the flow, there is still an incentive on the price models. And there are lots of merchants that are willing to adopt open banking just because of the pricing sensitivity. In the countries where there are real-time payments implemented already by the government or by separate units, open banking really creates also another opportunity, which is instant payments. So and it's closer to the card payment method, but the merchants can receive, or the businesses can receive payments instantly, and that's another benefit that was not existing before. On the opportunities for investment companies or PE companies, I'd say there are currently a few. So there is a big noise around Wirecard in the market, and they lost a lot of value for obvious reasons. And there are, I think, good assets that can be assessed and evaluated in a Wirecard example. And they are, I mean, there are lots of markets that they cover. So that will be more kind of direct opportunity for where the future will be after the COVID, let's say, will stop and the new year will start. I think the opportunities are more in the contactless payments or things that will not use a card directly. So it will be more, let's say, using your biometrics or other ways to trigger a payment without even involving a card or a mobile phone. I was also involved in lots of initiatives that are currently in the market around the soft POS implementation. So soft POS is the idea to download the software on your phone and transform the phone into a terminal. And lots of companies, so Samsung, Apple, and so on, are looking how to transform their hardware assets into terminals, which increase the overall value of their existing products, and as well generates new revenue streams. And the hidden area of let's say opportunities is how to transition and migrate all the software that is currently on the terminals into cloud and offer it via, let's say, omnichannel, via terminals, soft POS, or e-commerce. So these are areas where people should look to provide better services and optimize existing ecosystem.
Great, thank you very much, Petru. So I think that neatly brings us sort of really to the conclusion of today's webinar. I think that's been very insightful. I hope everybody who's attending has found that interesting. I'd like to thank everybody who has attended today for their time. And I'd also like to obviously thank Sonny and Petru for giving us their time and insight today. Just finally, as we wrap up, if you would like more information about any of the areas we've touched on today, or you would like a further conversation with any of our speakers, then please just drop us an email or give us a call. The contact details are on the screen at the moment. And also a quick reminder, we have a number of other webinars coming up. Please look out for those. And historically, we've done a couple in the last few months, one on retail and consumer, and one on supply chain logistics. Both have been recorded. If you would like to access them, then they're available to all of our clients and any contacts they may have. So thank you very much, everybody. Appreciate your time. Enjoy the rest of your day. Thank you and goodbye.